Hi, folks. It's June 18th, 2020, and we finally have received some real guidance about the PPP Paycheck Protection Program forgiveness process after Congress has passed the Flexibility Act. In a nutshell, they have expanded ways in which small business owners can now use the funds of the PPP program to get their forgiveness. So, in this video, which is going to be pretty long, I know, I'm going to cover both the self employed people that don't have employees and the employers that have to do additional work for the forgiveness process. Make sure to check on the description below somewhere for the table of contents, and you can skip through the different parts if you don't want to learn about how this forgiveness process affects all sorts of PPP borrowers. Now, one really important note, this is based on all the information available up to the day I recorded this video, which is June 18th. Make sure to check the Treasury website, which is going to have tons of information, updated guidances, the actual application form that may even change after the recording of this video. The day I'm recording this video, I'm using the latest interim final rule that was updated on June 17th. So everything that we know up to June 17th is going to be covered on this video tutorial. Now make sure to go back and check the website if information changes. It may change. Ever since this program came out on late March when the CARES Act happened, there's been tons of changes, tons of updates, and quite honestly, out of like 20 or 21 videos I have published to date, I probably have had to take down about 16 or 17 because information changes after the fact. So if you actually are watching this video now, right now, that means that I have not taken it down, and it means that it's probably the most relevant updated information. But check out the table of contents if you want to skip to any specific part. Now, I'm going to cover four main themes here. One, what does forgiveness mean, right? So if you are a borrower of a PPP loan, what does forgiveness mean? Two, we'll talk about the updated rules that exist up to today. So mainly the change from 8 weeks to 24 weeks. So we'll talk about the details of what that means. Then we'll talk about how forgiveness can actually be reduced, what conditions will reduce the amount that you can get forgiven. And then we'll talk about how to do the actual application process, which may vary from bank to bank, but at least you'll know the standard way, probably the way most banks will do it, using the standard SBA forms. Now, what is loan forgiveness? PPP is a loan. When you took out the loan through your bank, it was a loan, and it was under the circumstances that you will pay the entire loan back. Depending on when you took the loan out, it might be a 2-year loan or possibly a 5-year loan if you took out the PPP loan after June 5th when the law update came into effect. Now, you can apply for forgiveness, or you must apply for forgiveness so the bank can request the SBA to pay down the loan in your behalf. So forgiveness means the government will pay the loan for you. Once the loan is paid down, it could be paid down to zero or paid down to some principal, you must pay that difference. You're going to use either Form 3508 or 3508 Easy. In the website, in the Treasury website, and I'll put a link to that in the description, you can download those forms. For example, here is the 3508, and this was updated on June 16th. As you can tell from the header here, this was updated June 16th, and it's about 5 pages long. Or you can do the easy form. Of course, I would say that if you had a choice, you would pick the easy one because, quite frankly, it's easier. There's a lot less work, but you don't automatically get to choose. Like it depends on your circumstances, which we're going to cover on this video. The easy form is only 2 pages. So, of course, our goal is to try to figure out which small businesses apply for the easy or can qualify for the easy and do those, because it's going to be a lot less time that it takes to do it. Now, forgiveness is not automatic, so you can't just do nothing and assume the SBA will pay off your loan. You must make the request to your bank, either using the SBA form or whatever bank equivalent they give you. Some banks might give you a website or a form in a web portal that you have to do basically the same steps but in an electronic fashion. So this will possibly vary from bank to bank. But if you know how to fill out the forms, then you probably know how to do it with the bank. Now, real quick, now who is going to automatically qualify for the 3508 EC, for the EC forgiveness process? If you are self-employed, you had no employees when you requested the PPP loan, and the PPP money was not based on you having employees, it was only based on your own net income of your self-employed business, you should automatically go to the 3508 EC form, because there's no payroll calculations of any way, shape, or form. Now, the good news is for self-employed people, you will automatically get 100% forgiveness. And by automatically, I mean that you will get it. You still have to fill out the form, but you will get it, because if the loan was filled out correctly, the actual formula that it was used to get the dollar amounts is the same formula that you will use to calculate the forgiveness. Now, the full 5-page 3508 form plus internal worksheets would be for any employers that potentially had a reduction of FTE. We'll talk about what FTE means, or salary levels, and or they would apply for exception rules to those reductions of FTE or salary levels. We'll talk about that. Now, some employers, so some businesses that have employees that did not have reductions of headcount, salaries, or total hours that the employees got paid, could qualify for 3508, but you have to make the assertion that that is the case. So when we talk about the forms, we'll go a little bit deeper into what those assertions are. But general rule, you're going to use either the EC or the long form. Of course, everybody wants to go for the EC for obvious reasons. So what's the general rule of thumb with the PPP? You got funded, you must use at least 60% of it towards payroll costs. We'll talk about what payroll costs mean. And you can use at most 40% towards non-payroll costs, and we'll also discuss that. Now, there's no obligation for you to use non-payroll costs. So you can actually do 100% off of it based on payroll costs, and we'll do some calculations, examples, so you can see. You can use 100% payroll if you want to. It's only optional that you can bring in the non-payroll costs. But keep in mind that the non-payroll costs are capped to 40. So you don't need to do a 60-40 split. It could be 70-30, 80-20, 90-10, or 100-0. But you must have at least 60% of those expenditures in payroll in order to have full forgiveness or potential full forgiveness. Now, what are payroll costs? Now, this is for employers, people that have employees on W-2 payroll. Subcontractors don't count. They need to be employees with W-2 payroll. So if I have employees, payroll costs would be any payments I made to payroll, paid or incurred during the 24-week period from funding date. So we got funded. Now we got 24 weeks to spend that money in payroll or non-payroll costs. But from the payroll perspective, I got those 24 weeks to pay what's in gross payroll. So gross payroll, bonuses, any additional payments that are subject to tax, all that stuff would be included. The payroll taxes themselves are not part of the calculation. So just the gross payroll before tax is the number that you will use. Now, some employers that are working under the old rule that have everything set up for the 8-week period, because that was the original PPP loan was 8 weeks, they can still apply after 8 weeks and use the old rules if they want to. But I would suspect or assume that very little number of businesses will qualify under the 8-week process now that they know they got more time to do it and they have more time to make decisions and make changes. I think most people are going to wait for the 24-week period, but you could do the calculation based on 8 weeks, and if you qualify, you can start the forgiveness process early on. Now, a very important thing, no prepaid payroll beyond the 24-week period. So you can't wait until 23 weeks and then try to include some payroll in the future because you didn't use any payroll and you didn't fill out your payroll amounts, you didn't spend the payroll amounts during the 24-week period, and you want to include or make payments for payroll in the future. So every single paycheck that you paid or paycheck that you issued during the 24-week period needs to be for current payroll up to the point of that paycheck. So no paycheck that includes future payroll could be included. Now I know a lot of small business owners wouldn't do this anyway, but it's important to point that out. Now, owner employees. So if you have an S corporation and you are the owner, one of the owners, and you're also an employee, there's going to be a cap of $20,833. That's the maximum you can use as an owner employee, but it's also capped at 20.83% of your 2019 payroll. So if you're an owner employee, you have to take a look at first how much you paid yourself the previous year during 2019. Whatever is in your W-2 as an owner employee in your 2019 W-2, you're going to multiply that times 20.83, and that's going to be your cap. So during the current 24-week period after funding, you want to pay yourself enough to cover at least 20.83% of the 2019 payroll. That way you can effectively use all the payments, all the payroll costs that you paid yourself as an owner employee towards that. So again, it's capped at 20.83% of the annualized payroll for last year, which is also capped at $20,833, which means that if you paid yourself $100,000 or more in W-2 on the previous year, there will be a cap of $20,833. Now, employees or non-owner employees, they're going to be capped at 46.15% of their annualized payroll of the current year. So you take everything that was paid during that 24-week period, right? And then you're going to annualize that, and that will be multiplied times 46.15. Basically, what that is saying is you can pay yourself 24 weeks of a 52-week payroll calculation for the whole year during that 24-week period. Basically, what that means is every single employee in your payroll, when you're calculating for this PPP, all the gross payrolls you paid during the 24 weeks, as long as it's not more than $100,000 annualized during the 24-week period, you will have a cap of $46,154 per employee. Again, in other words, you can pay yourself, your employees, the equivalent of $46,154 during the 24-week period for gross payroll, and all those dollar amounts would count towards the payroll cost of PPP. So hopefully your employees have gotten raises or they're getting paid the same as last year, and that's plenty of money, because remember, I'm going to go back for a second. When you received the original loan, the cap on the original loan was $20,833 per employee. So now you can spend up to double the amount of what you actually received per employee towards payroll costs, which will make it really, really easy to get you to full forgiveness. We'll do a couple of calculations to just kind of see kind of the mechanics of how that works. Now, the other thing that's also part of the additional payroll cost is any medical insurances paid by the company or any retirement benefits paid by the company, such as contributions to the pension plan from the company, 401k matching from the company. All that stuff is included. Now, owner employees will be capped at whatever they pay themselves during 2019 for a 24-week period. However, the owner employees have the maximum cap of $20,833 anyway. So you can add their payroll plus medical insurance and retirement benefits for owner employees, capped at the same equivalent that you would have paid yourself during 24 weeks of last year. And that's how much you can add on top of the payroll cost. You can add that in there. For self-employed individuals or K1 partners of partnerships, they cannot use medical insurance and retirement benefits because those things would not have been tax deductible by the corporation or by the partnership rather anyway, and those things would have been included in their distributions anyway. So again, self-employed Schedule C filers and partnerships with 1065s K1s, those cannot include any medical insurance or any retirement benefits. So only C Corps and S Corps, could potentially qualify with their owner employees for health insurance and retirement benefits. Now let's talk about non-payroll costs. So non-payroll costs are rent and utilities, which is going to be paid or incurred during the 24-week period. If you incurred one during almost the end of a cycle, you can include it as long as you pay it within the regular cycle. So 24 weeks is approximately 5.5 months. So you could include 6 months as long as you pay it on time within the end of that 6 months, even if it's a little bit beyond the 24-week period. I think anyway, most people will probably fulfill that total 40% cap on the 24-week period anyway, and don't need to deal with that last incurred payment. But just make sure you understand you can also include the last incurred payment as long as it is within the billing cycle. Mortgage interest, that's going to be only the mortgage interest that has been paid. So if you paid a mortgage interest on a commercial real estate or even on equipment loan, on a business equipment loan, business commercial property, mortgage interest, you can include that interest during the 24-week period. You cannot prepay the mortgage, and you cannot use principal payments towards that. So only the interest portion paid within the 24-week period. Non-payroll costs are capped at 40% for forgiveness, right? There's no minimum. You don't have to use any non-payroll costs, but if you're going to use it, it's capped at 40%. Now, this word utilities gets a little bit tricky because utilities also includes transportation, right? So in the actual guidance somewhere, it says utilities is going to be things like your phone, your water, your electricity, right? That's the standard stuff, internet, but they can also add transportation. They don't go into many details of what transportation means, but I would say that if you don't have rental property, if you don't have a physical office, let's say you have a home office, and in lieu of having a home office, you want to use the cost of the gas you use in your vehicle or to move to the customer's offices to do your deliveries, or the actual lease payment of that vehicle to again do your deliveries, go work on site, that could be included. Again, you may have to go back into the guidance and go into the details of what transportation means if they ever release something like that. They might just leave it up for interpretation and figure out how people use it. Now, what factors can affect 100% forgiveness? Now, of course, everybody wants 100% forgiveness. That's automatically understood. But what can affect it? Well, number one, remember, after you include your mortgage interest, your rent, and your utilities, which is capped at 40%, right? That balance needs to be spent on payroll, right? So if you don't spend the balance of payroll, which is 60% or more, that's going to reduce your overall forgiveness. Now, if you had any employees in which their average hourly rate or their average annual salary during the 24-week period gets reduced by more than 25%, then the dollar amount, the actual dollar amount of that reduction becomes a direct reduction of your forgiveness amount. Also, if you reduce your FTE, your full-time equivalent, if you reduce it at any number, so it needs to be the same as the reference period, or it needs to be higher than the reference period. And FTE is going to be a calculation of total number of hours that your employees work. We're going to talk about exactly how that stuff is calculated. And finally, if you received an advance on the EIDL, so if you receive that dollar amount that's anywhere between $1,000 and $10,000, which is called the EIDL advance, if you receive that, regardless of when you received it, that will reduce your overall PPP forgiveness. So that's how it works. So the EIDL is basically an advance on PPP. Okay, I know it's confusing, but that's how it is. Now, if you receive the EIDL, the loan, the 30-year loan, the one that you need to pay back, that will not reduce your PPP forgiveness. It's only the advance portion. And again, the way you know is because you got anywhere between 1,000 to 10,000 based on the number of employees that you put on the application. So let's start with the EC form, the 3508 EC, calculations for a self-employed individual. So if you're a self-employed individual, that you file a Schedule C, you didn't have employees when you requested your PPP loan amount, the maximum loan amount you got was probably $20,833, anywhere between zero and that would be your maximum PPP. All you need to do is, let me just open up the form here. This is the easy form. All you need to do is you're going to fill out all this information, which you should have. You get the loan amount. Let's say the dollar amount was $20,833 because you made more than $100,000 last year. You're going to fill in all this information. But here's your loan amount. Then you're going to go down and talk about covered period. So let's say I got funding on May 1st. And then I'm going to basically calculate 24 weeks after that, which is October 16th. So by doing this, you are effectively electing the 24-week period. By actually entering 24 weeks instead of entering 8 weeks, you're electing the 24-week period, which is what you want, because the 24-week period gives you more, basically more leisure. You can even get more forgiveness amounts. So we're going to go to payroll costs. And in here, because you're self-employed, you're going to put here line 31 of your Schedule C divided by 12 multiplied times 2.5, which is most likely for 99% of cases going to be the exact same as the total original loan amount. Again, if you did something strange in your loan application and you got more than you were supposed to or less than you were supposed to, that number could be different. So there's a possibility if you got less than what you're supposed to, the PPP loan amount will be under the payroll cost. So the payroll cost, you're basically going to put, again, line 31 of your 2019 Schedule C divided by 12 times 2.5. That number could be higher than the loan amount, and that's okay. That's just going to render an automatically 100% forgiveness. If you had rent, lease, or utilities, let's say I had $5,000 in rent and $2,000 in utilities. Again, if my payroll cost, it's already the same or higher as my original loan amount, there's no need for you to add extra stuff, but you can do it anyway if you want to go through the exercise. So this is going to be $27,833. Then the PPP loan amount, which is $20,833. Then you're going to divide payroll cost by basically 0.60. So you're going to take 20,833 divided by 0.60. Let's do that real quick here on our calculation. So 20,833 divided by 0.60. That's going to be 34,721. Again, all these numbers are all really a moot exercise because at the end of the day, you're just going to get full forgiveness. So that's it. That's pretty much the fastest application you were ever filled out. So for self-employed individuals, this is going to be super easy. It's going to be great. It's going to take you maybe a few minutes to do. Go with your bank. Hopefully this stuff will be automatic or semi-close to automatic for you guys. Make sure you fill out all the information correctly. Get your PPP number, get your SBA number. You might have to contact your bank to get all this information. These employees at the time of loan application, that would be one for yourself. Employees at the end, one for yourself. So you're going to put all that information there. Remember that if you did get an EIDL advance, let's say you received $1,000, there's no way in the application where you reduce the $1,000. So you're actually applying for $20,833 full forgiveness, but then the SBA will check that they gave you that money and they'll go back and remit only the balance, or $19,833 to your bank, and you will still have to pay back the bank $1,000. So unless something changes in the law or the mechanics of this, that's how it works. So just keep that in mind. Really important. Also, don't try to not put it to say, oh yeah, I'm just going to not put it to see what happens. Remember, the SBA has this information. So you don't want to have any fraudulent information in your form because you are certifying, right? And they talk about here about, making false statements and all that sort of thing, and how that could, lead to imprisonment or huge fines. Obviously, don't try to skimp on that. If you got the EIDL advance, you must put that in there. Okay, so that's going to be the process for the self-employed people. Now, there's a couple of additional exceptions here. So using the same calculation process we talked about here, let's say you are an employer, and let's say you want to use the 3508 EC form. Now I'm going to go back and pull up the instructions. Okay, so we can read some really important information in the instructions about employers using the 3508 form. So look at the first one. Says, I'm a borrower, that's a self-employed individual, sole proprietor that had no employees. Okay, so we talked about that. So that option we talked about, and if that's your case, you know what to do. Let's say you are a borrower that has employees, but you did not reduce annual salary or hourly wages of any employees by more than 25% during the covered period. Okay? Now, remember, this is just an election you make. However, you need to make sure this is accurate, right? Because again, you are certifying this, right? So you can't just say, yeah, sure, I feel like I didn't have a reduction of annual salaries, or I feel like didn't have a reduction of hourly wages, or did not have a reduction of total number of employees based on the way they do their FTE calculation. Now, this says here, ignore reductions that arose from the inability to rehire individuals who were employees in 2015, but the borrower was unable to hire qualified employees, similarly qualified employees for unfilled positions on or before December 31st. So it's possible that you are an employer that had an FTE reduction and had a salary reduction. However, you could not find an employee of a similar skill set, and that would be one of the reasons why you're using the EC form. Again, what standards do they use for qualified employees, similarly qualified? I don't know. I don't know if there'll be a guidance on that. That might be more the honor code, or if you get audited, you're going to have to prove it. Okay, so you might have to prove it by having the actual ads where you put job postings out there. Like, you have to prove that you really couldn't hire similarly qualified employees. I don't know what the process is. Now, notice that you can also ignore reductions of employees that you offered for them to come back, but they refused to come back. So there's a FR 85 FR 3304. If you click on that, there you can actually read the actual regulation in terms of what exactly do they mean by that. So again, if you're an employer that had employees and you want to use the EC because you're going to make these certifications, you could use the EC form, which again, I understand why you want to use the EC form, because when we get to the long form, you'll see there's a lot more moving parts. Now, notice that there's another potential way that if you're an employer with employees, that you can use the EC form as well. You did not have a reduction of annual salary or hourly employees by employee by more than 25%. So the same thing. So the same exact conditions, and you were unable to operate during the cover period at the same level of activity before February 15th due to compliance requirements established or guidance issued between March 1st through December 31st, 2020 by the Secretary of Health and Human Services, the director of, so basically the CDC, maybe OSHA, right? OSHA labor standards related to the maintenance standards, sanitation, social distancing, or any other work or customer safety requirements related to COVID. Basically, what this is saying is you got the PPP money, you had employees, you had in fact a reduction of salaries or reduction of total number of employees. However, there was a specific mandate or establishment or requirement established by the Secretary of Health, by CDC, by OSHA that specifically prohibit you, your business, your circumstances, your industry, prohibit you from getting your business ramped up back to the same standards prior to February 15th. Again, exactly how they check that, exactly how you prove that, I have no clue. But these are the certifications you can make in order to skip the long form and go straight to the EC form. Okay, so that will give you an idea more or less if you're self-employed or an employer under what circumstances you can use EC form. I'll show you exactly how to do that. It's actually going to be super easy. Let's talk about the long form, the 3508, and this is where you have to make additional calculations such as FTE and salary reduction. So let's talk about FTE. FTE means full-time equivalent. And the way you calculate FTE, the way you know whether or not you had a reduction of FTE or what that reduction is first you have to find out what were the weekly average hours that every one of your employees worked either during February 15, 2019 through 6/30/2019 or during January 1st, 2020 through February 29th, 2020, or any 12-week period from May 1st, 2019 through June 15th, 2019. Now, I'm going to speculate here. There might be an update at some point that would also allow you to take a similar 24-week period from the previous year as the reference period. But that's not out as of today. But there might be something that comes out that goes, well, because now you got 24 weeks, you can also go back and look back at any 24-week period during the same time that you got funded equivalent to the previous year. Who knows if they do that? But as of now, these are the 3 periods that you have to use. You can pick any of the 3 based on the one that helps you the most. In other words, if you go back and do the exercise of calculating the weekly hours for all your employees, right, during those 3 periods, you want to pick the one that gives you the lowest number, right, because that's going to give you the lowest comparable point. Then we're going to divide the total weekly average hours by 40 and round that to the nearest tenth. So let's say, for example, that you had an employee that had average of 38 hours, then you divide it by 40, and you know you're going to have maybe 0.9 or something like that. Or you had an employee that worked an average of 20 hours, you divide that by 40, that's going to give you, 0.5, right? So that will give you an idea more or less of how you figure out what every employee is worth in terms of calculating your total FTE. Now, if you only had salaried employees, no hourly employees, salaried employees, by default, everybody works 40 hours. You just add everybody as one, right? So if you only have salary employees, no hourly, no part-time, only full-time salary employees, everybody counts as one. That's basically what it means. Then you're going to make the same calculation during the 24-week period from the day you got funded through 24 weeks later, and you're going to compare them. If the current period is higher than the previous period, the reference period, then you're good. If it's the same, then you're good. If it's lower, then you're going to make sure that you understand that that lower amount is going to cause a multiple reduction or a ratio reduction of your forgiveness amount. We'll do an exercise in numerical to make sure that makes sense. So let's do a quick FTE example here. So let's say, for example, that during the February 15th to 6/30/2019 period of the reference period of the previous year, which happened to be the lowest FTE of all 3, we checked all 3, ended up being 9.2. So that was the number, right? So let's say we had 9 that was 40 and then 1 that was 0.2 that added up to 9.2. Then we're going to do the same calculation during the 24-week period, and the number is 8.7. So then we're going to take 8.7 divided by 9.2, which gives me 94.56. Basically what that means is once we calculate what our total forgivable payroll cost is, we're going to multiply that times 0.9456, effectively reducing the total payroll portion of the forgivable amount by 5.43. So that's exactly what that means. So now let's talk about exceptions to the FTE calculation. So all the situations in which you can exclude any specific employee from your calculation, either from the reference period or the current period. So you had an employee that you laid off and they refused to come back to work, right? If they refuse to come back to work and you can document that, you can exclude that person from your calculation, right? That way you don't get hit with that reduction. You fired an employee at a cost, right? So they did something wrong and you fired them and you documented that. Your employee quits. If your employee quits, a specific employee quits, then you don't need to use that employee for the FTE calculation. An employee chooses to reduce their hours or request a reduction of schedule, right? Maybe they're going to work part-time, go back to school, whatever. You can exclude that employee from the FTE calculation. Again, you exclude it from the reference period and also from the current cover period, so you don't get hit with that reduction. Your business could not hire a replacement of an employee of the same skill level by December 31st or the day that you filled out the application. So you can fill out this application before December 31st, 2020 if your 24-week period happens before that, or you can fill it up to 12/31/2020 or even beyond that, but then the last day you would use to figure out whether or not you were able to get that employee back. It was 12/31/2020. And also, your business could not ramp up due to regulatory standards. Again, as we talked about earlier on the Form EZ form, they talked about that, right? There's compliance standards, government standards that didn't allow you. It was physically impossible for you to get back to where you were before the pandemic. And under these exemptions, right, if any of these exemptions apply, you can exclude that FTE, that employee from the FTE calculation, but that doesn't excuse you for not spending the money. You still have to spend the money on a replacement employee, on another employee, in order to get the full payroll cost reduction, right? I mean, the payroll cost forgiveness. So even though you can exclude any of them, you still have to spend the money. So that condition still applies. There is an alternative FTE calculation if you want to make it a little bit easier, to not have to go back and use that strange division by 40 calculation. What they allow you to do is take any part-time employees that work less than 40 and count them as half a person, and any full-time employees that work 40 hours or more, or salaried employees, count them as a full person. So if you have a lot of part-time people working less than 20 hours a week, then you want to use this method because it'll be a lot more easy. It will be a lot easier to do, and each person counts as half. If you got most of your people work 39, 38, 40 hours, then you want to use the other calculation because you're going to get a number that's closer to 1 and higher than 0.5. Now, the other potential reduction of your forgiveness is if there is a wage reduction. So the way wage reduction works is if a salaried employee gets an equivalent during the 24-week period, an equivalent wage reduction, right? So you're gonna take the wages between January 1st to March 31st, 2020. That's the actual look back period. So January 1st to March 31st, 2020. You're going to take a look at what were their weekly average pay, whether it's a salary or an hourly. You're going to take a look at that weekly pay, and then you're going to do the same calculation during the 24-week period after you got funded, and you're going to figure out what is the average hourly or average weekly pay of those employees. If anyone received a reduction of 25% or more, that total dollar value equivalent during the 24-week period compared to the previous period, the total dollar value equivalent is a direct reduction of your forgiveness. So let's do a couple of mathematical examples because I know there's a lot of moving parts, and this is why, of course, everybody wants to use the easy form and not the long form, because you had to do all these things with the long form. So example number one, let's say that you received a loan amount, a PPP loan amount of $100,000, and you got funded on May 1st. 24 weeks after that is October 16th. So anytime between October 15th and a day in the future, you decide to apply for the loan. Let's say for the loan forgiveness. Let's say you apply that same October 16th. Okay, perfect. So you're going to calculate your total payroll cost during the 24-week period, and let's say that's $84,000. All the rules apply. A cap per employee, cap for owner employees. You can use the health insurance. You can use the retirement benefits. Everything that's covered under payroll costs with their caps. And let's say that number, it's $84,000. Then you're going to pay worth of rent and utilities in the 24-week period, $16,000. Okay, so you actually spent all the $100,000 based on the loan amount. However, there is a FTE reduction from 10 to 8. So in the reference period of last year, whatever period we picked, the lowest amount was 10, and the current FTE count for the 24-week period after we got funding is 8. So there's going to be a reduction based on the FTE. Let's say there's no reduction on salaries at all, just headcount, and there's $10,000 that you received from your EIDL. Now keep in mind that the payroll ratio in this case seems like it's going to be 60-40, so we're good to go. with payroll, non-payroll. And remember that every employee is capped at 46,000, and every owner employee is capped at 20,000, whatever they pay themselves to payroll in that period. So how do these numbers work in terms of calculation? So my total payroll cost is 84,000. My salary reduction is 0. Then my 84,000 is now going to be multiplied by 0.8. Why 0.8? Because that was the change between 10 and 8. There's a 20% reduction, so there's a 0.8 factor. So we're going to multiply the 84,000 times 0.8. That gives me 67,200. Then we're going to add up our payroll costs, and then the total tentative forgiveness amount is 83,200. However, we received an EIDL separate than the PPP, so we're going to reduce that with the total amount we're actually going to get forgiven. So when you take these $2 amounts, you still need to pay back your bank 26,800 within the 2 years of origination, or 5 years if your loan got funded after June 5th. Now, what would that look like on the application itself? So let's open up the application here. Okay, so the loan amount was 100,000, and then we pick, let's say we have weekly payroll, and then our cover period is 5/1/2020 through 10/16/2020. Perfect. Okay, so payroll cost, that's $84,000. Rent and utilities, we said it was 16,000. So let's say it was all rent. So I'll put it here under rent. Okay, now it says how much you had reduction in salary. So based on an exercise, we had 0 reduction in salary. So that would be 0. So then it says add up all these numbers and subtract line 10. So that would be 100,000. Okay, so far so good. So far so good. We got the $100,000 in there. Now include your FTE reduction quotient. Now remember, we made in a worksheet separate than the PPP application, we made those calculations. The form itself, if you look at additional pages, you got the PPP Schedule A. There's all the mechanics there that you can fill out. It's kind of like a tax form where you can figure out how the payroll costs get affected. So you can go to this form and enter your average FTE, your salary reductions. Even though you have a place to fill out this form, I like to do it on a spreadsheet completely separate. I'll put in the description below a link to the AICPA spreadsheet that you can use to do all those calculations, but you do have to do those calculations, right? So in the form itself, we're just focused on the summary numbers for the exercise. So the quotient for the FTE reduction in this case is 0.8. Okay, so we can do 0.8. That would be easier. And then we got the modified total. So what's the modified total? So the modified total would be actually my payroll cost. Yeah. So my modified total would be line 10 times 7, right? So we're going to have 100,000, and we're going to multiply 100,000 times points. Actually, line 6. Yeah. Multiply that times 0.8. So that's going to give me 80,000. Okay. And then it says, what is the PPP loan amount? So the PPP loan amount is 100,000. And the payroll cost requirement will be dividing line 1 by 0.60. So let's see what happens when we take line 1, which is 84,000, and divide that by 0.60. That's going to give me 140,000. And the forgiveness amount in this case will be the smallest of all three, which is 80,000. So we're going to submit to our bank $80,000 forgiveness, but once they reduce the $10,000 we received with EIDL, right, which you must disclose that, okay, because the SBA knows this, they're actually going to end up giving you 70,000. So even though you asked for 80, they're going to give you 70,000. Now back in my spreadsheet, I think I did this calculation wrong. So really good that it happened. So the way it works here is we're going to add up here, put this over here, and then this would be a total of 100,000, and then this is now 80, and then this is now 70. So I did the calculation wrong because I did the FTE before the total payroll amount. So the reason for that is probably because I was following all rules, and good thing that we kind of did it on the fly here. But we were following the exact same guidelines of the new application, right? So we multiplied the FTE reduction by the $100,000, which was adding both the payroll and the rent and utility. So the FTE calculation is huge. I mean, to say the least, it's a really, really big deal to make sure that the FTE doesn't get reduced under one. And you could try the easy form, but if you know for a fact that you have a reduction in your FTE, that's going to reduce your loan forgiveness significantly, right? So that's a really, really important point. Let's look at the next example. So let's look at this example. So same $100,000 loan, okay? Now I only used $40,000 of that in payroll, and I used $60,000 of rent and utilities. I had no FTE reduction, so we had the exact same headcount, but one of our employees received a 50% reduction in salary, and the current 24-week equivalent of the reference period is $4,000 versus, sorry, the current paid is $4,000 over the reference period, which would have been $8,000. So there's basically a difference above the 25% of $2,000. So that's the dollar amount that I'm going to get penalized for. Now, there was no EIDL on this one, and keep in mind that there is no 60-40 ratio, so there's going to be a reduction of that. So let's look at my original calculation. So I got my $40,000 in cost, no FTE reduction. I had $2,000 of reduction in payroll above the 25%, which reduces to 38,000. Then I had, was it 40,000? 60,000. Let's do it here. So I had 60,000 in non-payroll costs, which gives me a tentative $98,000 of total forgiveness, minus in this case approximately a reduction. I'll take this out. Minus a reduction because there's a cap on the total amount of forgiveness I can get. So let's see how I came up with that number. So if I take my payroll cost, which is 40,000, and divide that by 0.6, then I get a cap of 666,666,667. So regardless of what my tentative forgiveness is, there is a cap. So I did this one correctly. Let's see what this will look like in the calculation. So we started with 100,000. There's no EIDL advance in this case. My payroll cost is 40,000. Okay, and then we have our rent and utilities. Let's say that's 60,000. Okay, then the total amount here is 100,000. I did have a reduction, so this reduction is $2,000, and the FT reduction is 1. So we have, so this total would then add up to 98. So we got 100,000 minus 2,000 gives me a tentative of 98. However, if I multiply 98,000 by line 7, it gives me the same 98, so we're good there. The loan amount's 100,000, and then we have payroll costs. There's a 60% requirement. So the way that will work is we take the 40,000, divide that by 0.6. That gives me 666,666. Okay, so that's correct. So 667. So my forgiveness amount is going to be the smallest of the three, 66667. Okay, so I think I did this one correctly on the slides, and here's the way you would do that calculation. Okay, perfect. Let's do example number 3. So we got the same dollar amount for 100,000. We paid in total payroll. We paid, let's do 110. So we paid, total payroll was 110,000. Rent and utilities was 25,000. Did I do this in this calculation? Let's do 35. Let's do 35. Okay. So we got 110,000 on payroll and 35,000 in rent and utilities. There was an FT reduction from 10 to 7, and there's a salary reduction of 5,000 plus $10,000 of EIDL. So let's see if I did it correctly on the slide. But first, let me just do it here. So we had, what was the EIDL? It was 10,000. Okay, so let's put here 10,000 on the EIDL. Our payroll was 110,000. So we got our payroll 110,000. And then we have our non-payroll was 35. We'll put the whole thing to rent. And then was there a salary reduction? 5,000. Okay. So salary reduction of 5,000. Okay. So then this calculation would be 135, 145. We want 140. Okay. So our total amount here is 140. Was there an FT reduction? Yes, an FT reduction from 10 to 7. So that's going to give me 0.7. So 0.7. So if I take line 6, multiply that times 0.7, so that's 140,000 because line 6 is 140,000. Calculator. And multiply that times 0.7, that gives me 98,000. So 98,000. Then we have a PPP loan amount of 100,000. And we have the division by 0.6. So we got 110,000 divided that by 0.6. So that gives me a maximum forgiveness amount based on the 60-40 ratio of 333. Okay, so that will give me a forgiveness amount of the smallest of the three, which is 98,000. So let's see if I got that right on my spreadsheet. I mean on the slides. Nope, I got some weird calculation here. So let's see what we got here. So we have 110 plus 35. So we got to do the 110 plus 35, which will give me 140. Perfect. And then I have to reduce the 5,000. Actually, that's 145. Okay, and that will give me a total of 140,000. Perfect. Remove the underline and remove the underline. Then we multiply it times 0.7, which will give me 98. Okay. And we don't need any of this other stuff here. 98 is, and the smallest number. And then I got a $10,000 advance. So that's going to give me an $88,000 actual forgiveness. So 100,000 minus 88,000 will require me to pay back 12,000. So even though in the form itself, I'm going to have 98,000 because that's what the form leads me to do. Remember that the $10,000 EIDL advance will reduce the final amount the SBA sends to your bank. So how to apply for forgiveness? Again, immediately after the 24 weeks go by, you're going to fill out this form or figure out if your bank has their own version of the form. You're going to have to make the decision if you're going to use the easy or the full form. You're going to submit your documentations. You have to submit payroll, summary reports, paychecks, receipts. You have to prove to them that you paid the money because the banks will ask for that. And you can use the AICPA's loan forgiveness. I'll pull it up real quick. You can use their spreadsheet. I'll put the link on the description as well. You can download the spreadsheet, and this is a more comprehensive spreadsheet that we have that kind of explains how to do the FTE calculations and the salary deduction calculation. It's not pulling up, but I'm sure it'll pull up once you guys try to do it. So that's basically what the process looks like. I would recommend, as an accountant myself, as a CPA, that you hire an experienced professional. Work with your current accountant, with your current tax attorney. No one's an expert at this because no one's literally ever done this before, ever. Some CPAs are going to know what they're doing. Some just didn't put in the time that it takes to understand this. Keep in mind that I'm publishing this on June 18th. By the time that most people apply for these things, close to October, November, December, or even 2021, people might already know how to do this. CPAs, attorneys may already know how to do this. So if you have one that you trust, one that you work with them. If you want to hire me or someone in my team, there's my email. If I have the capacity to help you, I will help you out. If not, I'll recommend someone that does. Anyway, I know this was a long video. Thank you for watching the entire thing. I wanted to give you as much information as possible so you can do this on your own, or at least be dangerous enough to know what you need to do if you're going to hire a professional to help you with this. Anyway, make sure you subscribe to the channel to get notifications if there's updates, and share with your friends and family. Hit like and add your comments below. Was I not clear on anything that would be useful for me to know? And I'll try to answer your questions via the comments below. Thank you very much, and you have a wonderful day.